Well, this company Gamestop, who probably was not on your radar screen before last week or so, has been in the news like crazy lately. So I wanted to explore what's going on and what the implications may be for your portfolio. So Gamestop is basically a video game company that has an antiquated business model. It's almost like Blockbuster was. They're still in the process of renting out video games to people on disc and having people borrow the game, then return them back. People are now downloading games online. They're playing their friends over the internet. So GameStop, needless to say, was in trouble as a business entity. Now what happens is there's a way that investors can make money betting against a stock. You can make money when the stock goes down. It's called shorting a stock. So think of it this way. Say you have this Rubik's Cube and it's selling for $5 right now. And I say, hey, I think this Rubik's Cube in the future is only going to sell for $1. This is an old game technology. People aren't using Rubik's Cubes anymore. And I think it's just going to go down in price. What I can do is I can borrow this Rubik's Cube from the broker. I can sell it for $5 right now, and I'll take this money and put it in my pocket. The only requirement is that sometime in the future, I have to go out to the open market and buy the same kind of Rubik's Cube and return it back to the broker. So say, for example, I sold it for $5. I borrowed it. It wasn't mine. I borrowed it, sold it for $5. And now what I think is going to happen actually happens. It falls in price. I go and buy it back for $1, then I give it back to the broker. Well, I got $5 up front because I sold it first, and then I bought it back for $1, so I made $4 in that transaction. So the price came down, and I made $4 in the process. I bet that the price was going down. Now, what happened is with GameStop, a lot of professional hedge funds bet. They saw the same thing that I just said. They didn't believe in the business model. So they bet that the stock price was going to go down. They shorted the stock. And they had a lot of them doing it, and they were heavily shorting this stock with a ton of pressure, downward pressure on this stock. Well, some retail investors got together on Reddit, some small investors, got together through social media and said collectively, we're all going to buy GameStop stock simultaneously. At the end of the day, stock prices are all supply and demand. If a bunch of people buy at the same time, it pushes the price up just like anything else. So the people that were betting that the stock was going to go down, now there's all these people coming in simultaneously buying up shares. They're buying $1,000 worth, $5,000 worth. Some were, if they had more money, they were buying even more. And they pushed this stock price up and up and up and up. So the people that were betting that it was going down, every time it goes up, they start losing money. Now, the difference with shorting a stock and buying a stock is if I buy a stock and it tanks, I can only go to zero, right? There's no limit to my loss when I'm shorting a stock. It can keep going and going and going to theoretically infinity. So these hedge funds were getting hammered. They were losing money like crazy to the point where, and this is important, when you close out a short position, you have to buy the stock. Like I said, you borrow up front, you borrow the shares, you borrow to buy the stock, and you sell it right away, but then you have to buy the stock on the open market. You have to buy it on the open market to return it back to the dealer. So in effect, when you're short a stock and then you have to close out your position, you're buying more stock. So you're creating more demand for the very shares that you're betting against. It's called a short squeeze. It's when a bunch of people are short a stock simultaneously and they're all losing so much money they have to buy the stock simultaneously to get out of their position. So along with the small investors that are buying the stock, now the hedge funds are buying the stock as well to close out their position. So they're putting even more upward pressure on the stock. So the stock is in the stratosphere. Now this is a dangerous game that they're playing because by all accounts, people that analyze GameStop stock, the stock is way overvalued according to many analysts that analyze the stock based upon the fundamentals of GameStop as a business. In the short run, stocks can really hit the stratosphere. They can become very volatile. Over the long term, stocks tend to trade based on their fundamentals, based upon the earnings of the business and the future prospects of a business. So if GameStop is a bad business, that will be reflected in the stock price at some point in the future. So right now, the stock's in the stratosphere. Today, it's lost 25% as of today. It's a very volatile stock, so by the time you're viewing this, it could be very different. But net, there's going to be some smaller people that are probably going to get hurt, that don't understand markets very well, that are buying into this because they saw some headlines, and they're probably going to lose some money. But what I think is important is the whole concept of smaller investors coming together as a community, leveraging technology and having an impact on the market. This may be the first sign of a different market dynamic that may not be going away anytime soon. So the big boys are going to have to be aware of this, take heed to this, and start to trade around what some of these smaller investors are going to be doing. It has an impact on the markets. It could impact your investments. For example, there was an ETF, a basket of stocks that reflect the entire retail sector. Well, GameStop was a stock that was a part of this overall ETF that had hundreds of different stocks within it. GameStop last week was 1.5% of this ETF. As of this morning, it was 19% of the ETF. The stock price had run up so much that it became disproportionate to the other hundreds of stocks that represented this ETF. So that has implications potentially for some other investments that aren't directly related to GameStop in particular. Also, hedge funds are now very leery of shorting individual stocks, because if it comes out that they're short, the small investors may gang up on those positions and run the price up against them and make them lose lots of money. So the SEC is involved looking at this. This is beyond just a frivolous headline. It could and probably will have longer term market implications that you need to be aware of. If you have any questions, this is Antoine Harris with Platinum Bridge Wealth Strategies. These are very interesting times. People are getting stimulus checks. They have a lot of time in their hands, and they're in these markets with these new brokerage firms like Robinhood, where there are no commission trades. There's very little friction and very little barriers to them coming into these markets and making some hay. So that's what's going on. If you have any questions, let me know, and I'll talk to you soon. Good. So my boys, tell them your name.
My name is Jacob. My name is Nathan.
They're going to help me explain the concept of shorting a stock to you. So I think that Rubik's Cube is going to go down in price. Jacob, may I borrow your Rubik's Cube?
Yes, you can. But you promise you have to give it back to me.
I will give it back to you later on, okay? Mason, you like Rubik's Cubes?
Yeah.
How much will you pay me for this Rubik's Cube?
$5.
$5. I think it's going to be worth less than that. I think the price is going to go down. People don't really play with these very much anymore. So give me the $5. I know I actually need your $5 for my example. There's your Rubik's Cube. All right, ding, ding, ding. So the price goes down over time. I have my $5. I put it in my pocket. Now, all I have to do is buy the Rubik's Cube. Yes.
Are we really going to get the $5?
Well, I'll give you some money later, okay?
Yeah.
So, all right. So, basically, I need to go out to the market and buy a Rubik's Cube and give it back to Jakey. So, now the price is only $1. The price came down. So, here's $1. Here, take your $1.
No, I'm not doing it.
No, but I actually need to give you the $1 to show the example. Here, I'll give you guys some real money after this, okay? There, thank you. All right, so Jacob, here's your Rubik's Cube back, okay?
Thank you.
So I sold it for $5. I took $1 and got the Rubik's Cube back. I made $4. I have effectively shorted the Rubik's Cube. That's the same concept of what happens in the stock market when someone's going short a stock. All right, fellas, say bye.
Bye.
Thanks.
Is it over?
Well, yeah, your part's over. Thank you, guys. It was great.
But they can't even see us.
They did too see you.
Hey, where?
Right there. That was so cool. Thanks, Macy.
Hi. Bye.
All right, guys, you guys take this money for the work you did and put it in your savings thing. Put it in your thing. Don't lose it. Take the $1 too.